Hello, everyone. We're having a nice night. Having some computer issues here, but whatever. This is why I hate technology. It's always just people trying to sell you something new. You ever notice that? It's like you get contacted and it's like, oh, blah, 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 blah. They're trying to sell you something. All right, anyway, let's jump into this. There was actually a really good article in the Wall Street Journal today about NVDA. And I think, and I've been saying this for a while, NVIDIA is going to go lower. Okay. I don't know where it's going to be in 2 years or 5 years or 10 years. But what we do at Stock Market Jobber is mostly trading. I mean, we do talk about fundamentals and things like this, but sometimes fundamentals can lead to trading ideas. So I'm going to bring up this article here. And it says AI mania triggers.com flashbacks. Now, I am old enough, unfortunately, to remember the internet bubble, and things were just kind of out of control. Things were illogical. All right. It was a speculative mania. And this is what the author of this article kind of points out. Okay. Yeah, AI this, AI that. Come on, man. AI has been around for 70, 80 years in the late 60s. People are like, oh, AI is going to change the world. AI is going to take my job, blah, 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 blah. But but this is what I want you to focus on is this chart right here. Okay. The price to sales ratio. And now no, we're not talking about technicals now. We're talking about fundamentals. Fundamentals that we compare the price to the earnings, the price to the sales, the price to the book value. For the average company in the S&P 500, the price to sales ratio is 2.4. Okay, 2.4. I'm not going to go into detail about how this is calculated. It's pretty easy. You just take the sales and you take the price and divide it by the sales. But anyways, 2.4. The price to sales ratio of Nvidia is 47. Okay, 47. Maybe it's 43. I'm not really sure. I forget what I said. The point is, it's out of control. It is so high that long term, this stock, in my opinion, is going lower. So let's take a look at it from a technical point of view. And that's kind of well, it's not kind of, but that's what I do. Stock is down about 10% in a few days. We're oversold. We've reached a important level. Maybe we get a bounce. So if you're a trader, I think you kind of look for a bounce and maybe you can make some money there. If you're a long-term buy and hold investor, in my opinion, I'd stay away. 47 price to sales ratio. This is an outlier. It's like an anomaly. Now, we sold off, and where do we find support? Right around this important level. Why is there support around this important level? Well, it's an important level. Okay, I just said it. Why is this level important? It was resistance, and then it became support, and it became support again. Resistance can become support because of buyer's remorse, right? There's a lot of people who sold here who, when the price goes higher, they're like, oh, dude, I made a mistake. I want to buy my shares back. What the hell did I do? If it gets back to my price level, I'm going to buy my shares back. You're probably, people that are listening to me right now, and I know there's hundreds of them because I could see it on my screen here. You've probably made this same mistake. And this is probably why you're listening to me right now. But anyway, resistance can turn into support because of psychology. There are investors who sold here who regret doing so when the price went higher, and they tell themselves, damn, I'm going to buy my shares back if I can get them at the same price I sold them at. So if you have enough remorseful sellers placing buy orders at the level that was resistance, it turns into support. So now it's become support again. Okay, here we are, 2 months later. I think we're going to go lower, but it's not a coincidence that this is where we stalled out. In the institutional trading world, where I spent a good part of my life, more than 2 decades, we don't worry about this stupid stuff like Fibonacci and Elliott wave, and Gann theory. I mean, damn, if you want science fiction, I would recommend watching Star Trek or Old Twilight Zones. It's not a coincidence that we stalled out there. Okay, it's not because of Fibonacci or whatever. It's because it's an important price level. stockmarketjobber.com, we talk about the important things about trading: levels, trends, momentum, psychology. That's it. There is no secret. So resistance became support because of seller's remorse. Now, why would support become support again? Well, there are people who sold here who are like, damn, I made a mistake when the price goes higher. And they tell themselves, if I can get my shares back at the same price I bought them at, I'm going to. Same price I sold them at, I'm going to. If you have enough remorseful sellers placing buy orders, the level that was support can become support again. This is what we call market memory. Price levels that are important can stay intact for a long time. And some price levels are important, some aren't. If you know where the important price levels are, it's going to help you trade. It's like your map. So make sure you come out and check out our website here and stay with us, Stock Market Jobber. We're going to, pretty soon, we're going to start charging money for it. Not a lot. I mean, a couple $100 a month, whatever. There are people that have made a lot of money off just understanding these basic principles that I teach them. So at this point in my life, I'm kind of semi-retired, but I like teaching. Okay, so that's the story there. Now, the other thing I want to look at is Alibaba, and this is a kind of a different way to look at the market. What I want to say about Alibaba, if I can actually type it in, remember the old Bugs Bunny where it's like, who Sam Chop and all right, whatever. Most of you are probably too young to understand what I'm saying. I looked at the Alibaba numbers. Okay. If you want to look at a company's numbers, what you can do is type in the symbol and then type in IR for investor relations. And a lot of times that brings you to, well, I mean, Alibaba is a Chinese company, so it's a little bit different, but that'll bring you to the investor relations page. Now, I looked at these numbers and they looked really good. Okay. Everything is up, everything is going their way. You would think that the stock should be up. They beat estimates, they're this, they got revenues growing, net income is growing, but the stock went down. Okay. So when you get really good numbers and the stock goes down, this is something we call bad action. We can't really define it. It's not a definable thing or a quantitative thing, but numbers come out that are really good. The stock goes down. That tells you that despite the fact that the numbers are good, there's still more people that are interested in selling it than are buying it. I mean, look at this. Income from operations up 70%. These are phenomenal numbers. Up 70% in a year. That's huge. Okay? That's huge. Revenue is up 14%. There's nothing in this earnings report that looks bad. But as a trader, I know that the market really doesn't care about fundamentals or research reports. The market is driven by supply and demand and market psychology, investor psychology. So I don't care about the numbers. As a trader, it's like, yeah, whatever, dude. I don't care. But what I do care about is, wow, the numbers were good. The stock is down. That's a sign of bad action. Regardless of how good the numbers are, there are more people that want to sell than want to buy. The stock went down. Stocks that have bad action, it's probably going to go. My guess is it's going to go lower. All right, that's it, everybody. Thank you. I hope you learned something. I hope you have a nice weekend, and I will see you on Monday morning. Although I'm probably going to be putting up some stuff over the weekend, so make sure you check back in. Okay, thanks, everyone. Have a good night.